Good evening and welcome to the Australian Stock Market Show. Now, buyers were actively driving the All Ordinaries Index up last week, pushing it up nearly 1%, and in doing so, broke through the previous all-time high of 8,168 points. So what should we expect next? Well, stay tuned as we discuss our thoughts on that shortly. We'll also take a look at world stock markets, and for our main topic in tonight's show, we get into the top 10 undervalued ASX stocks to buy now. Are banks or pharma stocks best? First up, we'll share our hot stock tip for the week, so sit back and relax. Again, tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the important questions around the market. Tonight we give you our thoughts on some great stocks like Race Oncology, Judo Capital, BSP Financial Group, the world stock markets and more, so sit back and relax as we'll get into those soon. I'm Dale Gillum and I'm your host for tonight, and joining me are two of Wealth Within's highly experienced analysts and professional traders, Janine Cox and Philip Tortevsky. And we are Australia's most trusted stock market educators. Good evening team, how are we?
Fantastic. Squeak, squeak.
Squeak, squeak. What's that supposed to mean?
Well, I might have a squeaky voice tonight, so just watch out.
Oh, you're putting on that deep, sexy voice.
Oh, yeah.
Okay, we better watch out, Phil.
Well, I've been staying away all day, so.
Cool. Well, anyway, tonight, as we mentioned, we do get stuck into world stock markets. But first, let's take a look at this week's hot stock tip. Phil, what have you got for us tonight?
All right, so tonight the hot stock tip is Aurizon Holdings Limited, stock ticker code AZJ. So let's get straight into it. On your screen right now is the marketindex.com, and you'll see Aurizon is a rail freight operator company. This company transports more than 250 million tonnes of Australian commodities, connecting the miners, primary producers in the industry. So basically it is the shovel supplier for the old gold rush, if you can painted in that light.
Well, wasn't it the ones that made the shovels and supplied the shovels were the ones that made all the money?
Made the most money, yeah, exactly.
Absolutely.
That was the point, wasn't it? All right, so back to market index. Some performance on this stock. It's got a 2024 year-to-date performance of negative 3.68, a one-year return of negative 8.5. Now,
doesn't sound like they're making all the money.
Well, sometimes it's nice to be early to the party, and I think once we get to the chart, we'll see some of that. But look, they are underperforming at the moment, beating the sector on a one-year basis by just a little, and also beating the ASX 200 on a one-year basis, which is doing negative 18. Now, it has a market cap of 6 billion, ranked within the top 100, so one of the biggest stocks on our market. Now, let's get to the chart to get to the juicy stuff. Now, I want to start off on the monthly chart here and have a look at this, Janine, because I've marked this level, black rectangle level, what have you, and this level coincides with around $3.30, $3.40, and to me it is a very, very important level for this stock. You can clearly see with one look how many times this stock has found a base from around this price level. It's done it back in 2012, again in 2016, had a big bounce in 2020, and it is finding another base in more recent price action, most recently in February 2023. So that to me is very interesting, because right now it is positioned at a level that throughout history has proven to be the springboard for nice bull runs. But what is also very interesting about this stock is that you can see this stock was really a trending stock for a very long time. It was trending up nicely, trending down. It was giving you that really clean price action, if you will. But at some point since August 2019, once it fell back to this level around 2020, it became more of a sideways type market. So it went basically from a trendy move, or I guess directional move, to an accumulative type of conditional.
Good for people who are like range trading, but not much good if you want to trade the trend.
No, but what it does, I guess, show to us is that, stocks, they go up, they go down sideways, and they go through their different life cycles. When they are accumulating, we do know that at some point they are going to get back into trend. So you do know what's next. And if we get back to the chart, just to have another look at it. I've got these 2 dots here, which to me are quite important, because you can see throughout this whole sideways move, we often say that when a market's finding its base, it can get quite erratic in price action. And if we just analyze this whole period as I run my mouse cursor over, you can see that the price action is very erratic. Higher highs, lower highs, and a whole mix of price action. But since February 23, we're getting a real nice clean type of price action formation, higher highs, higher lows. So I think obviously there's resistance at around $4 here, but if it can get through where I've got my horizontal line above 407 and clear some of this price action, given the way this new, I guess, movement has started to unfold, I think this is definitely one to watch. There is a lot of potential if it can start breaking higher.
I love your hot stock tip for that for this week, Phil. So that was an excellent choice from that one. That is it for our weekly hot stock tip. Now, shortly we're going to get into our topic for tonight. But before we do, right now is your time to get involved in the show and have your questions answered. So call now on 039290 9988, or you can text your question to the number on your screen. Now, the first caller into the show right now gets a copy of my book, Accelerate Your Wealth. So pick up your phone and dial 0392909988. Now, while you do that tonight, we'll give you our thoughts on world stock market. So let's get into that.
On your screen right now, you can see a list there of the world markets, and this is obviously showing what the performance is for the year to date. And with right at the top there, we've got Argentina up 61.88. Well, they'll be screaming from the rooftops there. And the Nikkei stock average is actually 23.09%, so that's doing really well there on the Nikkei. The US markets obviously are leading at the moment, S&P 500 index, but as we've said before, the Dow Jones is actually only up 6.7%, so the bigger stocks on the market not performing as well. So that's really interesting to see that divide. Spain's actually right up there. That's one we haven't seen right up at the top there, Phil, for a while.
Yeah, it's very interesting because, I mean, you know, in Europe you've got Spain, Portugal and Italy really that are leading the way, you know, coming out of obviously the recessions they've had, but they are leading the way, and it's, you know, clearly you're seeing Spain as being the 4th best performer globally. So if you're not watching it, then I think that's one market to definitely put a closer eye on because, you know, it's moving and the opportunities will definitely be there.
Now, are you trying to trick me here? Because we've actually got some red ones, some green ones, and how about if I just play around with it for a little bit? So Spain is high, but the DAX is actually a bit higher than Spain, just a fraction, which is interesting. So the German market's actually really interesting for traders who are wanting to look at patterns on markets. It's one to have a look at. The Dow, we've talked about FTSE 5.82, which is catching up. That's interesting that the FTSE's up at 5.82, ahead of the Hang Seng. So Asian markets still being held back, including the Australian market. So we're really boxed in there, aren't we, with the Asian markets?
Well, I'm surprised no one's mentioned it yet. Our market broke through to a new all-time high this week. So
should we get the flags out and start
well, we should start getting excited, you know, because we've been waiting how long? We've been waiting for months, since March, for this to happen. We mentioned July would be the month, given the way the market historically does provide big runs during July. And hey, I mean, started off like a bang.
Yep.
And I know you've got something special for us because you always have something up your sleeve. So what have you got for us?
Cupboard's bare.
The cupboard's bare? No, you've never done that.
All right, shall we have a look at the chart? Okay, you can see there the NASDAQ Composite Index there. Holding up there with the Nikkei we've just talked about before. So these are the 3 markets that are obviously leading, and this graph is really nice in terms of being able to see the leaders from the laggers. And I don't know about you guys, but I actually prefer to look at this graph than to look at the table. Down below that we can see the markets in the middle there just tracking more sideways, but as Australia has broken out, and we can see Australia's down there in the blue dashed line there. As Australia's actually started to break out, other markets are likely to turn up as well, because we know one thing for certain is that when the bull market goes, that most markets tend to move up, you know, the big markets around the world.
But will they be waiting for the move on the Dow to take the lead, or are you saying if our market starts to turn up, everything else will start turning up at the same time?
Not necessarily. It's not going to be based on our market, but it's going to be based on what's going on around the world with interest rates. That's definitely one, and the property market.
Because I mean, we've got talk of higher interest rates coming again, but then I don't know whether that's going to fix our inflation problem, because I think it's more of a supply-demand type of scenario rather than something that just put interest rates up, because people
Yeah.
aren't going out for dinner, they're cancelling Netflix and things like that as well at the
Which
same
is
time.
interesting because it's right in that sort of sweet spot before the boom, isn't it? Which always
It
happens.
is. So I'll be waiting to see what's happened over the next month when we bring this up again next month. So looking pretty good anyway. Well, that is it for our thoughts on the world stock markets. Now, before we get into our first email, remember to get your questions answered live on air. Now is the time to text or call into the show. Now, you can also send your questions to info@wealthwithin.com.au and we'll answer them in next week's show. Now, let's get into our first question. Now, we have an interesting stock to look at now, as Peter has emailed in asking, "Hi, I'm looking at an entry for Red, thinking of having a stop at 34 cents. Would like your input on the chart. Love the show. Thanks, Peter." What do you reckon, Phil?
Yeah, interesting, Peter. Thanks for the stock tip there, because red was going to be my stock tip today, and guess who you've had to do some extra work all day today to find a new stock.
Go, Peter.
But yeah. Anyway, great stock choice. I mean, let's get into the chart and have a look for you, because I could speak on this stock for 10 minutes. It was going to be my hot stock tip for today, and you know, this is a stock that recently merged with Silver Lake Resources, if you know.
Yes.
The other gold player. Increasing the size of this new company. And what I found really interesting, if I can bring up a horizontal line here for Peter, where are we? Right there, I found what was a really interesting level for this stock. Oop, that's gone a bit high. If we can go lower, down through here, back in, let's zoom this out. 20 odd cents or 18 odd cents was really interesting for this stock, even pre-merger. And it's come back to test that back in March 2023. I like the way this is actually expanding, because, you know, just like we showed in the stock before it, it's made a nice base, it started moving up, and now it's been going up, you know, for the best part of almost 8-9 years. So it is in a long-term uptrend, albeit it is moving on a steady gradient, which is not a bad thing relative to the previous volatility that this stock used to encounter. But the fact that it's created a new high in April 2022, fallen away, some traders might have thought, okay, it's a bit worrying, but it's broken through to a brand new all-time high, a new high in May 2024. To me, this looks like a nice pullback. If it can hold these levels, you do have a nice momentum line, if I can get one through there, holding this stock up. So, I mean, good stop choice. In terms of the stop loss, I have nothing wrong with it, fine. It's trailing it as it's going up. If it can keep going higher, then I think you're onto something.
Yeah,
last words
interesting,
from
isn't
you?
it? Yes, very much so.
Okay.
The thing that I find interesting about this stock is that it's actually, like Phil was saying, it's doubled in price. So how much would it take for this stock to double again? And what is the pattern that it's actually on? And the interesting thing about it is that if some of our students out there would recognise these sort of things, especially if you're familiar with the advanced course. Now we're just looking at that. So there's an expectation here based on this stock that we could really see, and look, I'm looking at that $1, but eventually I'd be saying there's a potential for it to go all the way to $1. That's a stretch target. So we have like different targets for stocks to get to, but you know, it's not out of the question for the stock to head between 80 cents and $1.
All right, there you got 2 thumbs up, Peter, from both Phil and Janine. So well done on that pick for red. Now we have a caller on the line. Welcome to the Australian Stock Market Show. Who have I got on the line?
Ryan.
Well, thanks for calling in, Ryan. What's your question for us tonight?
Just got a question about Sonic Healthcare. Just what's your thoughts on that? On the weekly chart, seemed to have a bit of a pullback, and in the short term, how much upside it could go up?
Okay, so do you own the stock currently?
No, I don't currently own it. I was just waiting for it to get through that next little peak before I was thinking about a buy, and then setting a stop loss below the low, about 12% below that.
Okay, looking short, medium or long term for this one?
Yeah, short term, short to medium probably.
Okay, so what, 12 weeks or less? Or
yeah, around that mark, yeah.
Okay.
Yeah, probably, 12 weeks, 3 months sort of thing.
All right, well, fantastic. Thanks for calling in, Ryan. Janine, you want to talk about Sonic?
Great stock, really good stock choice. So, and I don't know, Ryan, if you've been looking for stocks that have been trending down for a while, but you know, maybe there's a pattern in some of your stock choices. This is a really good example of that, just to look for something that could be, just setting up for this longer term opportunity here, which I really like. So you can see there that it's actually been tracking below this line, which is fine, but there's a nice reversal here on the monthly chart. It's probably breached the trend line on the weekly chart now. And look, it's just setting up nicely here, consolidating. I'm pretty, excited about this one, Dale, right now. So looking at potential support down here, we've got all these levels across the bottom there. Where it came back in COVID, it broke that line. There's always a risk that there could be further downside. So obviously if it takes out this low here, then just let the trend run before it gets in. But if it moves up to the upside, could look good.
So he's waiting for the pullback to finish. Do you want to talk about that, Phil? And look at where his possible entry is?
Yeah, let's go to the chart and have a quick look. Let's bring up the weekly chart here. He's talking about getting in once, I guess this is the pullback here he's referring to in July 2024, if the stock goes higher. So all I'll say on this is just, I know he's got a stop loss in place, which is fantastic. He's got a short-term mindset in place, which is another big tick. But just be prepared for this to turn back down and fall away, because there's one clear example here of a stock in a downtrend that has had a bit of a rise, and that's what you got out of it. You had two further examples of it just, giving you that similar type entry before it fell away. The longest move was back in February 2023, but again, it fell away. So what I'm saying is, understand where you're playing right now. It is in a long-term downtrend. And so be prepared if the trade goes against you quickly, have your stops in place, as you said, and know the risk.
Very good advice there from Phil and Janine, and thanks, Ryan, for calling in. Now we have another caller on the line. Welcome to the Australian Stock Market Show. Who have I got on the line?
Well, g'day, Dale. You got Michael.
Well, welcome to the show, Michael. What's your question for us tonight?
Yeah, I wouldn't mind having a look at SSM. It looks pretty good. I'm looking at the monthly chart, and it's pulled right back from its highs to its lows, and as soon as on the fib, it's got back to the 0.38, and it looks quite healthy. So I'm just wondering what you guys think of it, and it should be good for Janine because it's over $1.
Yeah.
Well, that's good, Michael. Do you own the stock at the moment, or are you looking to buy it?
I'm looking to buy it, yeah.
Okay, short, medium, long-term trade?
I reckon this one might be... I'm thinking of this one medium to long term.
Okay, fantastic. Well, how about we throw to Janine and get her input first? Thanks, Michael, for calling in.
The voice sounds familiar. SSM, great looking stock from a trending point of view. Let's go to the chart, and you can see there, it's actually looks like it's reached a significant bottom there on the monthly chart. I'll just pan out so we can see the whole history. And you just love to see these type of pullbacks occur with a nice little consolidation at the bottom. It's actually tested it, taken off. I'm thumbs up on this one. If it doesn't pull back and fall below that low there in May, I think this
looks very good.
Yeah, it does look nice, doesn't it? So if we just go to the weekly chart now, we just have a look at that move. Again, it's pulled back. What can we expect to see? I'll just have a look there at what the rise was this time, 40%. And let's go back and have a look at what it did down here. About the same. So look, nothing's a shock to us or a surprise in the stock market when you see that sort of repetition. There's nothing to say that it couldn't get to $1.70, even $2, looking at the way that it's moving at the moment. But like I said, that level that low there in May is really important. Nice one.
Anything you want to add, Phil?
Yeah, I mean, this is what you want to see. Unlike the example before, once stock's coming out of those major lows, you want it to show you that it does want to go higher, and waiting for that confirmation. You've got very clear confirmation on this one. It's running perfect. So
Michael's picked a winner there. I reckon you're doing really well, Michael. I like the stock, and obviously Janine and Philip do as well. So if you want to be like Michael and Ryan, you can give us a call later on in the show. But Rusty is actually asking us about Drone Shield, and he writes, "Hello, Dale and Janine and Phil. I've been invested in Drone Shield since the price was around $1.70. The price has continued upwards for a couple of weeks and is still making great gains. As of writing, the price is $2.55. I'm feeling a little pride in choosing this stock and making good returns, but as they say, pride comes before the fall. What is your analysis of this stock as it stands?" I think I'll go to you, Phil.
Yeah, all right, Drone Shield.
Can I just say go easy?
Go easy.
Oh, look, this was our hot stock tip back in January. So, we were looking at this one back at 40 cents. And obviously it's gone gangbusters. But let's have a look at the chart, because You know, today was a very interesting day for the stock, and it was humming along until today, where it literally reversed around 33 odd % with this very, very big outside bar here. Now, is that unexpected? No. Because if you look at the way this one's moved since since breaking 40 cents, it's literally gone vertical, and it's done it at such a pace that, to me, this kind of move is unsustainable. I mean, stocks don't just go up like this consistently forever. The amount that it's gone up is a little bit surprising, to be honest, given what kind of stock it is. But our pullback is definitely expected. Where can it pull back to? I would argue that it probably has more to pull back to. Because stocks, they do like to come back to their natural gradient. That is one thing that we see time and time again. And I mean, before it really had that sharp takeoff, I think a pullback to somewhere around this $1.35, $1.40 would be more in line with it settling down to its natural gradient. Could it reverse and go back up again from here? Sure, it can. But I think the more important thing, Janine, is talking about this buy at $1.70.
I think the more important thing is, like, if someone we always talk about buying with the trend, right? And if something's accelerated away like this, then it's about, okay, going with the trend, but where do you set the stop loss? Yeah.
Well, it's where do you get in?
Yes.
The first thing. Now, when he got in, he also said in his email that a lot of the analysts were saying it was, had run its race and it's probably going to be topping out. So they're not too far wrong on that anyway, but it's like you've got to get your entry right and your exit right, not just, thinking, okay, well, it's gone vertical, because it had gone up 80 odd % from from the low to where he bought it. So is that a right place to buy, and what should he be doing now?
Yeah. I mean, look, the way it's accelerated, you're right. Right now, the most important thing is your capital protection. So where are you placing your stop? Are you trailing your stop? Are you going to stick with your initial stop? What's your plan basically on the exit? Because I mean, the way you got into this stock, I hope you do have a plan for the exit given its volatility. So as long as you can tick that box, then I think you should be safe. Okay,
cool. Just protection of capital. That's what Phil's talking about. Well, that is it for our take on a Drone Shield. Now, have you ever wondered how to cash in on undervalued stocks? Well, you're in luck for tonight, as we're going to take a look at the top 10 undervalued bank and pharmaceutical stocks, as we believe there is significant value here. But that's not all. We'll also put the latest stockbroker recommendations under the microscope to determine if they are good or whether you should avoid them. Now, let's start by taking a deep dive into bank and pharma stocks, because surprisingly, they actually share some common traits. So Janine, I know this is not a likely combo, so what is it that makes banks and pharma basically similar?
I knew you'd ask that. Well, it's about this. Get in at the right time and sell at the right time, because they'll both make you money, but the real point here is they accelerate your wealth, a bit like your book, really.
I don't know about what am I going to do with this girl?
Okay, so banks, on one hand, good dividends, reliable earnings. So pharma stocks, the big pharma stocks are like that. Obviously, there's a lot of research and development that goes into these pharma stocks, and it's about picking the right stocks at the right time.
So basically you're saying reliable earnings growth constantly. That's what you're saying. That's why they're similar.
Well, that's how they become when they grow.
Is it the same with the dividend yields?
Dividend yields typically can be quite good, but when they get into that real growth phase, those pharma stocks, the dividend yields start to just drop off a little bit.
Okay, well, we know mainstream industry view banks as relatively safe and they pay reliable dividends, but what you're saying is that we can also put big pharma companies in the same basket. Now, this is backed up from an article from Barron stating the industry views big pharma as safer, long-term holdings with steady, predictable earnings growth over time. Now, it's hard to argue when looking at stocks like CSL, ResMed and Cochlear, as they've been fantastic performers over the last decade or more. But these stocks didn't start out that way. Now, in their early days, these stocks would have been seen as too risky or too small by big institutions, which raises the question about how to find the next CSL before it starts its run. Now, I know you and I talked about this recently, Phil, didn't we?
Yeah, we did. I mean, it's about broadening your scope firstly, because, you're not going to find it in the top 100 or the top 50. So looking for companies that do have, are unique, for example, may deliver a product that is very unique, have some kind of competitive advantage over the market. I mean, for example, Drone Shield is a good one that we can bring up. You know, we looked at Drone Shield. To be honest with you, I saw that it was in the drone space, in military, war was happening at the time, so that was quite interesting. But if I say I put in months of research in the back end of the company, no. What got me to look at Drone Shield was the price chart. So it's looking at that price chart and determining, as we say, you know, because a lot of these stocks, when they do start out, they'll be illiquidity, price action will be a bit iffy, but at some point it'll get better and it'll start moving up and it'll give you signs that this stock is turning around. So it's identifying those moments, just like with Drone Shield at that 40 cent level. Okay, things were changing here, and then, you know, you end up in a CSL scenario, hopefully.
Well, hopefully, but is it just as simple as looking at a chart? I mean, I say that because what might drive bank stocks may or will likely be different than what drives pharma stocks. Now, we've seen examples of this over the past few decades, haven't we, Janine?
Yeah, exactly. And we see stocks like this, these pharma stocks, particularly the small ones, they'll spike on news. So the market's always factoring in what it knows, but it's trying to anticipate what could happen. And with these types of companies, there are opportunities to make some really good gains because, you know, if they get that spike on the news, then the stock can take off 20, 30% on that information. So, you know, this is where you can really, with some of these pharma stocks, if you can get in early enough and you can get in based on some good rules, that you could just sit there and wait for those opportunities to happen. And it's funny because I worked with a student years ago who was looking at these pharma stocks and experimenting a little bit. You know how we say you could have one or two stocks that are on the light end of the scale in terms of lower liquidity. Well, that's what he did, and he was just screaming from the rooftops when the stock took off. He couldn't believe that the analysis actually worked, and he was able to get in and do it safely.
Good news story, I like that one. Now, in a boom, we do see a lot of investment plowed into product development, especially with these pharma stocks. Now, so something to watch out for in order to find possibly undervalued stocks. What you're suggesting is look for news of breakthroughs and increases in research and development. That's what you're saying, isn't it? Recently, the head of Goldman Sachs Research said the pharmaceutical industry needs more growth, and the more cash they are sitting on, the more announcements we will see about mergers and acquisitions. Now, being aware of these things these things going on really is important, wouldn't you say, Janelle? I know you talked about, takeovers. We should be starting to see a lot of takeovers.
Yeah, a lot of M&A activity tends to be typical of what happens in the boom, but be very careful to sort of fall in love with the predictions of some analysts and thinking that that's going to happen. We've seen that happen with a lot of people before, made the mistake. But M&A activity means that there's a lot more cash there.
Mergers and acquisitions is what you're saying.
Mergers and acquisitions. So where there's more mergers and acquisitions, banks are making more money. There's more money to splash around into pharma type or research type stocks.
All right, well, I have to agree with you there. Now, what we often see following that is analysts upping their growth forecasts, along with every broker in town making recommendations about stocks trading below fair value. Now, for those watching on Talking Well, stick around, as after the break we'll get into whether you should rely on broker recommendations or any broker recommendations for that fact. But now let's get into the charts to share with you what we think are the best undervalued banks and pharma stocks. Now, I'm going to throw to you, Phil, to start it off.
All right, so on your screen right now is a watch list of the pharma stocks right now. And I mean, Janine, we put this watch list together. Obviously, the pharma stocks, there are a lot of stocks that are those illiquid, low cap stocks out there. But you can see some of these ones, they've got market cap of, 2 billion, right?
Yep.
80, and then it, obviously goes down another 2 billion. It can go down to even 82 million. On the lower end, 7 million, 9 million. So you need to be really prepared with when you're looking at these stocks, whether they are liquid enough to trade. That's the first thing. But looking at it from a fundamental perspective, like we have done in the past on past shows. But I know you've got a spin on this because we normally look for the fundamentals, the PE ratio, to be a certain level to find whether a stock is valued, undervalued, however you want to call it. But you've got a little different spin on this.
This is where, with these less liquid stocks, it's not about relying so much on the fundamentals. It's more relying on the technicals. Because often what the fundamentals often follow that, so the news will follow what the chart is telling you, even more so on these types of stocks because of the liquidity. So looking at the charts again here, or the table, you can see here that some of the nice big ones, actually the PEs are quite high. You've got to expect that with some pharmaceutical stocks where you've got research and development going on. The prices of some of these stocks may have already taken off. So that's one thing to factor in. And then it's about deciding whether you want to go with the trend or look for something that's maybe coming off a bottom, that's consolidating like what we've talked about before. And in those cases, you're going to see stocks that could have PE ratios that are in negative, but these are only in sort of slight negative territory. I'm not too concerned about those, but learn from this. Actually use it as an example and monitor what happens with the share price after seeing the fundamentals. I did this a lot when, around the time of the GFC and during the time of the GFC, I was following those fundamentals just to get a really good understanding of how the fundamentals lead or lag.
These are all pure pharma stocks, not necessarily biotechs and healthcare stocks like ResMed and
CSL and Cochlear.
They're not actual pure pharma stocks. So we're going to go and move on. We're going to look at the banks now, are we?
Yeah, I think that's a really good idea. Let's have a look at the banks. So we've got one here now. No surprises about which are the big banks here. So I'm not particularly focusing on the big banks today. It's more about what's down the bottom of the list and where are the opportunities. But it's a very different mix here. Less speculative than, say, what you'd expect in pharma. Okay, so this might suit a different class of investor. You're seeing here PE ratios that are more in the norm here. So, in between 10 and 20, that's what we're looking for bank stocks. If they go below that, there's still opportunities there. It could be something that, you may be actually setting up. EPS, mostly in the positives, but again, I would allow a little bit in the negative if the chart's actually telling you that there's a potential there. But just be prepared for some more volatility. You could get surprise moves on some of these stocks based on news. So it's about having a stop loss. It's not about buying this and thinking I'm going to hold it for the long term regardless of the moves. It's about being prepared.
Why is the Macquarie on the list?
These Macquarie is more maybe financial. These are like pure banks.
That's
pure banks.
But what's really interesting, if we just go back to that watch list, and we've been speaking about this pharma and banks paying that dividend. So if you just take a quick look down the bottom there, 18, 9, 10, 13% yield. And I mean, these banks, that's what they offer.
Yeah, it's interesting, isn't it? So, so that's the watch list, and then we go down to the stocks. Yeah, so what I did is it's no surprise to some of you that I filtered out. I was trying my best to filter out stocks, but there are a lot of stocks that can be below $1. So in these sort of more speculative areas.
You've been forced to go below $1. Is that what you're telling us?
I actually cleared everything out that was below 10 cents. You'll laugh at that one.
I will.
And then after the break, I think we've got more.
It's only you shifted the decimal point one place to the right and you've got $1.
Okay, so if we have a look at the first one, this stock really interested me when I saw this. It's over the $1 mark. I like the way that this is setting up. I also am really interested in the technology of this company. This is actually Race Oncology. Now, there's no surprise there. They're in the cancer area and the research and development, and they've got they're working on drugs that actually assist that process, but also protect the heart, which I thought was an interesting, variation on what is going on out there. So that to me ticked a sort of a, I guess.
Well, heart disease is, one of the biggest diseases out there.
Well, chemotherapy, is very, very invasive on the body, and it's very harsh on the body. So they're trying to actually develop the drug that actually looks after the heart. So above $2, I'm actually thinking could be really good for this stock. It's just looking not like a nice setup. But if it falls below this low here, it doesn't matter how good the media says or they say that their drugs are. The market will have voted.
Yeah, I'm with you. I think you need to trade this extra tightly. And as you've said, any signs that this wants to reverse, and the first sign you'd get is if it breaks below this July low, I would be very cautious in looking for it. But I mean, that's not to say you can't trade this stock because it trends beautifully. So if you are tight and experienced in trading these stocks, you can get growth even just coming out of these lows, 100% through there. And another example through here, you've got another 30, 40, 50% in a couple of weeks. So I really like it too, Janine. It's coming at a real significant low, but given the way it's fallen so much, I think, like that previous stock, we're looking at those higher bases, that confirmation that it does want to go higher. Because right now on this monthly chart, you've had the sellers, I guess, give it one test, back in April 2024, which coincides with this level here. But if they can give it another crack and see how strong they're faring, then that would give me more confidence long term.
Well, I think anything that protects your heart's got to be good in looking at it. So maybe we should offer it free to those people on dating apps or something.
I don't even
Dating
think
apps.
that.
Yeah.
I think I'm going to have words with you after the show.
Oh, cool. I'll look forward to it. You going to bring the boxing gloves out?
I'm saving those.
Okay. Can we have a look at another
All right.
stock?
Yes, we can. PER. Now, this is also an interesting stock, and I've just had a blank moment. It must be one of those seniors moments.
Oh, senior.
Oh, Jenny normally doesn't have those.
No, I don't.
You know, we park in the normal spots.
It must be because it must be because when I'm looking at this stock that it's actually trading below 10 cents. So I sneaked one in there.
Oh.
Okay, so
I
this
like
is
it
actually
when you get out of your comfort zone.
Yeah, I know. And the reason that I picked it is just because of that classic setup that we've showed you so many times that happens on stocks when they're doing this consolidation prior to a burst out. But it has to actually go up and strongly through that high before it's getting on. So it'll be above 10 cents at that point when it gets through there. But if it starts heading up strongly, then this could be a really interesting one as well. I just keep an eye on, there's a level of resistance across here, and I won't get your magnifying glass out to look at that. Talking about the seniors, you can see across here that there's upside potential there to that next level, which looks interesting. But again, these are not buy and hold, put it in the drawer and see what happens. These are ones to make some money out of and then let the mugs actually take the rest. Never be worried if you've actually bought a stock, made a profit, and it's kept going up. You know, everybody's got to have a share. So looking at this main pharma fill, this one's actually the biggest stock in the group, and I really like how this is unfolded on the long-term chart, and it's come back to test almost all the way to that low there, but it got sold off recently. That sort of destroyed things for a little while, but look, it may not be over just yet, but I'd have to see it get back above that $7 mark before I'd be interested in it. But still, if it did that, you know, that could be a really good one to watch. And look, stocks like these sort of stocks get taken over in these booms. You know, you've got to watch out. Some of these stocks we're looking at could be takeover targets.
Well, they could be, but I'm a bit perplexed when this stock, it's sitting at $4 or something, and that prior peak is $7. So that's a huge run.
It is.
Before you're going to be happy with it.
That's right.
So I think I better throw to Phil and go, well, heck, how can we help people a bit further than that? Because there's a lot of money to be left on the table.
Well, it's a good point you make, because you know all the stocks we've seen at the moment, they really, to me, what screams out is risk reward opportunity. Now, easiest stocks to trade out there? No, but risk reward opportunity, does it provide a significant opportunity? Yes. And with that said, there are a lot of caveats, because obviously the trading around these levels is much harder. As you said, this stock is very, very volatile. In a matter of 3 or 4 weeks, it could blow up or down 30, 40, 50%. So you need to be wary of that. But, you know, like Janine said, down at these levels where it is, if we put on this horizontal line...
Now, you're not allowed to agree with me, remember?
I'm not?
Dale just made that point, didn't you?
No, I just said I better throw to Phil. I didn't say he wasn't allowed to agree with you. I know where my bread's buttered.
Yes, so look, let's get back to the chart. But this $4 is very important for this stock. It's been important before that really strong bull run back in 2012, and recently it's been very important, obviously since 2020. The stock's filtered around here. It hasn't really wanted to break lower. The fact that it's had this strong run up in April 2024, this pullback is a little concerning, but again, you're playing at these significant lows, so the price action can be erratic. I'd say if price can get up above this $7 level here, it is an opportunity for those that do want, you know, to factor in those kinds of stocks and do understand the level that they're playing in, you know, because as I said, the risk reward scenarios here are huge.
All right, okay, I'll throw it back to you now, Janine, you can have it.
Okay, PAA is the next one I've got on the charts there. This also really struck me when I saw this. Similar to when I was looking at some of the tech stocks that were highly volatile, and they come back and they test these levels and then take off again. It's same sort of fashion, you know. But, you know, we're below my dollar mark, so it's not one that I would like, but I'm not going to be, you know, holding back on stocks that potentially others may like out there. So I just had a look at this and I thought, okay, what's the short-term picture? You know, I see sort of 30, possibly, you know, 50 maybe % in there. In terms of the upside, if it gets going through that peak there. Now, if it falls below this low, forget about it. Just let it fall away, wait for a better opportunity because, they will come, given this, how much time it's spent going sideways down here.
And that's the thing with these stocks. I mean, to me, trying to play around these areas, if we just go back to the chart, trying to play around these levels with the stock is a lot more risky because, I mean, you can see that if we take into account this this high on the monthly chart back in 2014, the stock never broke through to new all-time or to break through that high all the way until February 2024. So you literally could have avoided getting stuck in a sideways moving stock until it broke through to new clean price levels. So to me, I think the way these stocks are trading when they're coming out of these significant lows, there's nothing wrong with allowing the stock a lot more room to move than normal. So placing 30, 40, 50% stops, or even a 70% stop on it, given the volatility of it, but getting involved when price wants to tell you that it wants to go higher at new levels, I think is the safer approach so you don't get stuck in this sideways action with your money doing nothing.
Okay, I like that.
I actually would prefer to trade these on a counter move rather than do that. Initially, I'm looking at this and thinking, once it gets above here, it's sort of got plenty of upside. But for those short-term traders, looking at these counter moves might be actually another way of thinking about this, which is one of the things we teach in our course. It's a more aggressive strategy, but it can actually work out better for even like big stocks. You can trade using counter trends.
Oh, yeah.
Well, you need something that moves fast. You need more sensitive entries and exits. So that's really what you're saying, isn't it?
Yeah, exactly.
So what's our next stock?
All right, the next one is going on. We've got IDT. Now, IDT is actually trading at around 12 cents at the moment. This one's actually come off a bottom, but it's made a higher low on the monthly chart. You can see the liquidity issues here with this. If this is not your type of stock, don't worry about it, but learn from it. It's interesting to see what happens in a boom. So keep a couple of these on your list just to have a look and understand what goes on. But you can see there it's taken out that high. This is the first really good sign that we've seen for this stock for a long time. So it's making these higher lows and higher highs as we're going up. But it's still got a bit to prove. We can see that underneath all of that, there's this support underneath there at the moment. If it takes out that low, I'd say just wait. There'll be another opportunity. But I'm watching this. I think it's an interesting one, and I think there's plenty of upside in it. Just look at how it has run in the past. When it gets going, you could make all your money in 1 or 2 months there.
Weeks, you could.
Weeks, rather, weeks.
And it's real interesting. Like you've said, it's fallen away. It's given that basey type of price action, and now it's starting to curl up. So it's an interesting proposition, but I mean, to me, it needs to get above this where we've got marked around 22, 23, even 30 cents, because look at the difference in the range of the bars. That's where more liquidity comes into this stock. I mean, I wouldn't be touching it at these levels. It's just too illiquid.
We've done 5 pharma stocks, and I haven't seen a bank yet.
Well, I guess the question is, could one of these become the next CSL, ResMed, Cochlear, or one of the big pharma stocks that's global pharma stocks?
Well, they could.
But I mean, even getting into CSL at $1 or $2, you didn't have to get in at 5-10 cents, or even FMG. I'm going off topic, but
and BHP at 40 or 50 cents.
Or could they be a takeover? Like there could be a technology that they've got that actually is valued by a company overseas.
So can we see a bank stock at least? Otherwise, I'm going to have to shut you guys down and
okay,
move
let's
on.
go. All right, we've got BSL. Now, some of you may not have seen BSP Financial Group before. You can see from the chart, this is what we mean by illiquid. But in a boom, liquidity comes into even small stocks like this. And I'm not saying it's a buy now, but look at this classic sort of sideways consolidation. Another one here. These are the sort of signs you want to look for. It's doing another one right now. There's potential here to the upside. This could take out the high. I'd do a little bit of research on a stock like this. I wouldn't just be buying it without actually understanding what's going on. But if it takes out that high, we could be seeing new all-time highs in the stock. But it's for me, I'd want to have a tight stop loss on it.
All right, and it's over $1. So how about the next chart?
That's right. It's over that dollar mark. But JDO, which JDO is probably a more well-known, Judo Capital Holdings is a really good one, Phil.
Yes.
It's actually gone up from this low, made all the right patterns at the low, and then a consolidation.
Yeah, and I mean, we've shown time and time again, regardless of the stock, regardless small cap, big cap, they all move in a very, very similar fashion. They're either going sideways, they're going up, they're accumulating, or they're trending. And right now, this one is accumulating. So I think if this can get through these highs, of March 2024, up around that $1.40, $1.50 level. I think in the short term, you've definitely got an opportunity to get involved at this stock, which, you know, the way it's lining up to me could turn into a more medium-term, long-term play, given it is financials and, you know, that sector obviously has been flying.
Well, I'm sure you've got more stocks to show us after the break, so for anybody on Talking Well, stay tuned for those. Well, that is it for our main topic for tonight. Now stay with us, as we've still got plenty of emails and stocks to go through. For those watching on YouTube and Facebook, remember to comment below this video. You can watch all of tonight's show plus the additional exclusive content, including more stocks from tonight's show, on Talking Wealth. So head over now and grab your free 7-day trial on talkingwealth.com. You can also watch our weekly Australian stock market report, where Phil and I share our views on the market. Now, every week we share multiple stock tips that will pay for your yearly subscription to Talking Wealth. If that's not enough, you'll also get hundreds of amazing interviews with global industry experts in the stock market, finance, gold, money management, mindset and wellbeing, fintech, artificial intelligence, crypto, business and loads more. This is all on talkingwealth.com. Now moving on, if you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 03 92909988. That's 03 for Melbourne, 92909988. Or you can text the number on your screen. Now whilst we wait for your call, let's get into our next email. Now our next stock to analyse is Spartan Resources, as requested by Gerard, who asks, "Hi Janine, Phil and Dale, I bought a good amount of SPR at 66.5 cents at the beginning of April 2024. Today it reached $1.09.5. I would really appreciate your analysis of the stock. Do you think it still has the potential to go higher? And is it time for me to sell? Kind regards, Gerard." I'm going to throw to you, Phil.
Yeah, look, good choice, Gerard. And, you know, I just want to say, Gerard emails in every week, and good on him, because, you know, how many people do we know they maybe watch the show, or they have all this available to them, and how much did I bug you guys when I was learning, you know?
You wouldn't leave, both of you, Janine wouldn't leave me alone when she was learning.
But I mean, you have to ask the question if you want to know an answer, and good on you, mate. I keep emailing in, because you've picked a really, really good stock
I think you should just do the course.
Well, that too, yes. But let's get to the chart and have a look for you on this Spartan. It's actually called Gascoigne. It's called Gascoigne Resources at the now. It's the same ticker code SPR. And does it have more in it? Absolutely, it's got more in it. This stock is running. It is coming out of this significant low, obviously trending really, really nicely. Now, the only thing I would say with this is, you know, we've mentioned a few times stocks as they do trend. Now, let me bring up the weekly chart. You saw it again with Drone Short as an example. The quicker they move away from the steady gradient, the more likely they are to, run out of steam and experience some kind of pullback. And if we were to measure this one, it's come... Let me get this momentum line up here, because it's playing games with me. But, you know, we kind of started off on this gradient, and then it got a little bit faster and started moving on this gradient. And now if we look at the stock, it's moving on a much faster gradient like this. So generally when you see stocks moving or speeding up in gradient 3 or 4 times, it's generally a sign that, you know, we're probably reaching the end of a short-term move. But if you're looking at it long-term and you're willing to accept the ebbs and flows, the ups and downs on it, then, I mean, how can you doubt it just yet? And Janine's pointing at the screen right now.
And look at the price.
Oh, yes, it's above $1. There you go.
Only because...
I'm thinking, why are you pointing at the screen for?
Why are you pointing at the screen for?
What am I saying wrong?
Just to trick you. Just because once it gets above that level, often these stocks pull back from there.
Or institutions start to get involved. So.
And Janine gets involved in it too.
There you go.
That's what we think anyway. Well, anyway, we now have a text from Sydney who is asking about AL3. She says she bought near the top at 21 cents. I like the company's prospects. What do you think? Cheers, Sydney. What do you reckon, Janine?
Gee, someone else obviously likes the prospects as well, just looking at the chart. Have you seen it?
Well,
have a look at that. You can see that it's just rocketed off. Like, what I like about this, though, what looks interesting here, is if you look at this bottom here, they're so close together, these bottoms, and there's another one there. So a long-term basing pattern, which is what's really important. And off that bottom, if we just zoom in closer, we can see that there was a nice little consolidation there, a little consolidation off the bottom, and it took off. You know, that was the first sign this week, 28th of June 2024, that this thing was more likely to get going. So you've got to be quick when you see these things happen, but there were false triggers in the past, but not necessarily the same sort of setup that what we're seeing now with that huge support. But, you know, what do I think right now? Look, anything could happen with this stock, and that's really the reality of it with when these stocks burst out of the blocks. I'd want to just find out why. First of all, did it go up? What caused it to rise like that? Is it news? Is it sustainable? Or is it just a flash in the pan rumour?
Well, 400% move in a few weeks, that's like huge.
Isn't it? Yeah.
So it suggests some sort of rumours or something going on, or people ramping it.
If you owned a stock and it went up 400%, what would you do?
Oh, look, I'd probably be getting out because I would reckon it's... And I think you can't say to me a stock in 4 or 5 weeks, the value of that stock goes up 400%. It just doesn't happen. Yep. Imagine BHP increasing by not just its share price, but its company value increasing 400% in a few weeks. Not possible. So therefore, that move is unsustainable because it would either get to fair value or it's way overvalued and it's just been running on rumours and speculation and maybe ramped in chat forums and stuff. So that's what I'd be thinking. I'd think it'd be, you know, hey, we probably need to think about what our exit strategy is quickly.
I agree. If you're in it, you would be thinking about that. And I'd probably even go so far as to go to a daily chart and have a look there and see how we can actually use some rules to manage the risk to the downside. But at the moment, like looking at that, I would just be interested to see whether it holds. It might even hold where it is at the moment. It seems to be, you know, a few opens and closes around the same level now. If it goes back above 20 cents, I'd stick with it. If it actually comes back and trades below this low, I think, you know, if you were in it, you would just seriously be thinking about taking the money.
Yeah, but I mean, and if you're not, obviously it's given you a clear indication that, you know, it's being bought. That's the first thing that you can tick off. But now it's up to you to find how you're going to trade this stock. Yeah, because it doesn't matter whether it's going up or down or sideways. It's how are you going to take advantage of this? How are you going to get in? What rules are you going to have to catch the move? How are you going to protect yourself given the way or how volatile this stock is? So that's really the only question you've got to answer now.
I love your advice. Now we've got a text from Joey who says, hi team, could you please look at FMG? I bought it recently at $21.80. Yes, I bought a falling knife. I would love to see it on an RAG if possible. Thanks, Joey. It's not really relevant putting on an RAG, Joey. It's completely irrelevant putting on an RAG. But Phil's going to have a look at it on a chart and give you some really great advice right now.
Yep, all right. FMG is on your screen right now. Let's get onto the charts. Catching a falling knife, yeah, you're not wrong about that, mate. But right now it has reversed from this level. And what's quite interesting is that there is reasons why I think that it could reverse from here. For one, it's coming into this period of where the stock accumulated in the past. And, you know, for all our students out there that know, these are levels where stocks like to come back to test. So there's one tick for you on why there is reason why it is reversing. Now, the second reason why it could be finding a bit of support around here is this momentum line. Although it's not come exactly to it, it's coming back to that momentum. So there are two reasons. But that being said, am I going to go out on a limb and say this is an absolute low? No. I mean, this could just be a short-term reaction, go up for a week or two, and then continue on to capitulate away. Because we always talk about trading on that confirmation. So right now, not on the weekly chart, nor even on the monthly chart am I seeing any confirmation of further sustained longer-term upside. Because I think if you're looking at buying this stock, you're obviously buying it because you want it. Yeah, well, you're in it. And you're thinking when you buy it, you want it to go up, you know, 15, 20, 30, whatever percentage it is to warrant getting in on those prices. But you want to do it with confirmation. And without that...
So what should he do now? I mean, if he's in it, he's losing money because he said he caught a falling knife. How should he manage it right now?
Well, right now he's obviously in it. I would say have a stop loss, have a line in the sand moment, whether it is under this particular low here or whatever predetermined level you have. You've made your decision this time. Stick with your decision. Don't change and play around depending on how it's going. Don't move the stop lower if you think, oh, it should start reversing. I'm going to give it a little bit more. Be tight in it because you are trading without confirmation. So, I mean, yeah, have your stop in place and hope for the best.
Yeah, great advice for you, Joey. So just listen to Phil and you'll do very, very well. Now we have a general question from Darren who is asking, hi Janine, Phil and Dale. I have a question for tonight's show. How do you decipher market depth when deciding if you purchase or indeed sell a stock? How do I know where the buyers or sellers are driving the stock price? I've often wondered and clearly don't understand how to interpret market depth, hence my question. Appreciate your thoughts and insights. Darren, I think I'll go to you, Janine. You're the queen of this, aren't you?
Actually, that wasn't the plan.
Oh, sorry, it's Phil then. All right.
Is it? Oh, yeah.
Phil's the king of this.
You know,
I changed the plan, I'm sorry.
Look, I've actually got a podcast that I did on our Talking Wealth. You can get it on Spotify, which I've said, is volume analysis important? And more specifically, I'm speaking about the market depth. Now, I don't have obviously half an hour to describe what I've put in there, but there's a lot of detail on the market depth, you know, how to determine aggressive buying, passive buying, limit orders, market orders, how that all plays into it. And I mean, to answer your question, I've seen stocks go up on with a huge limit order, which you think would be blocking it from going higher. I've seen stocks go up on relatively no volume. So to me, the importance on that market depth really only to use it for determining, are there enough stocks or is there enough volume at the price levels that you want to transact at? That's what I'm using it for. If I'm not using it as a level of support and resistance, I mean, there's been so many times out there, if you go through the history of market depth, where traders have spoofed the market, if you know what that means, where they're putting in fake orders to make it look like there's a big order there and then pull it last minute. So just do it to determine whether you can get in at the price you want and there's enough volume there. Apart from that, I'd throw it away.
Very good answer. Now we've got a Facebook message. I think we've never had one of those before. We've got a Facebook message from Tess Faldet, who says, could you please look at MMS?
Macmillan Shakespeare.
Yeah, Macmillan Shakespeare. Do you want to take that one, Janine?
Yeah, that looks interesting, doesn't it? Actually, it's been quite volatile, had two peaks really close together here. So if we just expand up the chart, it's important to look at the whole history of it just to see where it is in the big picture. And we can see there that there's a really strong level here. So while the stock's actually hanging below this level, I wouldn't be thinking much of it, but because it has been trending up, and you know, if we draw a line up from in the sand up here, we can see it's trading below a trend line there. But that's why it's really important right now. If it falls back below last month's low, it could head below this low. It's got to trade back through that black line at around $18, but it is a nice trending stock. It does go up for a few months here or there to give a nice return in a short time. So it could be worth a look and just wait for that level to be broken again. I think that's the most important thing. Now, look, Dale, we don't often share testimonials from our students, but this one just popped up today, and it's from Mark, who is 60. And he said, completing the course made a huge difference. My trading results are measurably improved. I progressed easily through the online modules with great support from the educational team. I couldn't recommend the course highly enough. This proves that age is no barrier. Thanks, Mark. Now, I have a very special offer for all of you out there. We've put a link in the descriptions for this video on YouTube. If you click on that link, you'll get to watch all of tonight's show, plus our bonus, even the high-pitched voice, section of exclusive members-only content. No credit cards required, so click on the link and check out why subscribing has its benefits.
Well, I mean, to me, we're covering some really great stuff in the last half of this show. So we've got more stocks, we've got other things. We're going to be talking about brokers, broker recommendations, where they should take them. Why should people then click on that link who aren't subscribers? Is there any more that you want to add to that?
There's some really juicy tips in there. I don't know that I want to actually let that cat out of the bag just yet.
Well, I know we do. I've had many emails from people saying, hey, that last 30 seconds pays for my whole year subscription, not just the market report that Phil and I do.
Exactly.
It's simple. We share more there, and we share stuff that we don't share to the free YouTube platform. And it's a lot of stuff which is, you know, as Janine said, juicy, it's technical, and it can help you out a lot.
We give more of our thoughts, you know, on what's going on with different stocks as well.
I know we do use RRG graphs, and we bring more depth into other areas as well. I mean, last week we talked about trading and investing stocks, and we got into some really deep stuff there that helped a lot of people.
And some of the questions that when people call in, they're just on a different level.
Well, they are anyway. But anyway, well, thanks for Janine, and thank you for watching the show. Now remember to show your support for our channel and smash that like button, and remember to subscribe to our channel so you can know when we go live and put up new content. Now, before we let you go, what was your favourite part of this show? Was it our hot stock tip or Phil's hot stock tip? our topic for the night, or was it a viewer question? Let us know by commenting below this video. Now, if you're watching on talkingwealth.com, stay tuned for more exciting stock picks, insights and strategies. We'll be right back with all of that and more. Next week in our main topic, we get into the best time to invest in stocks for 40 years. Make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. Now, if you love our show, remember to hit that like button now and subscribe to our channel, as this shows your support for the team that puts in the effort each week into bringing it to you. If you are subscribed, then you'll always know when we go live and put up new content. As always, thank you for joining us. For now, goodbye, good luck and good trading.